Hello, welcome to the Gulf Coast Real Estate Insider Podcast. I'm Brett Ellis, joined by my mother, Sande Ellis, and we're the Ellis Team at Keller Williams down in Southwest Florida. So, what do we want to talk about today?
Well, Brett, one of the things I think I'd like to talk to you about is the CMI. It's what the current market index, and this is, explain it.
Okay, so this is Ellis Team proprietary data. We developed the Ellis Team Current Market Index, we developed the MSI, the Market Spread Index, and we developed the Luxury Spread Index for Southwest Florida.
So why is that important, though?
Because it helps identify in a factual way, because it's been proven over time, the future direction of the market. Are prices likely to go up or down? Is demand getting tighter? Is it softening? Like, what's going on in the real estate market?
So that's really important to a buyer and to a seller, right?
Yes, I think both need to know this information. So let's talk about the Ellis Team Current Market Index. We call it the CMI. It went up just a little bit from 378 to 388. So essentially, it's pretty flat. That means our market is stabilized and it's not unexpected. Now, let's put it in perspective. A lower CMI index favors the seller. A higher CMI index favors the buyer. So we are pretty neutral. It went a little more towards the buyer side, but that's not unexpected because we pulled this data on March 2nd, I believe. It's right after all the closings took place in February, and so there can be a little bit of flux, and then that number will start building again. So it'd be really interesting to see what the next two readings are. I suspect it may go back down again by next Tuesday. We pull that on Tuesdays. We pull the luxury number on Wednesdays, and the market spread index we typically pull like on Fridays, so we don't have those numbers to release just yet.
So these numbers are reflective of, you said you pulled the numbers on 3/2, but closing dates, what, up to March 2nd? Is that correct, or what?
Yeah, so it's everything, it's basically the market in real time. It's real-time data. So, like I said, the current market index went from 378 to 388. Now, today is Wednesday, March 4th, and we just pulled the luxury CMI. And that number shifted from 482 to 495. So it also pretty level, pretty stabilized, but went up just a little bit, just like the general market did. So what does that mean? I think it's still level, still stable. And again, it's susceptible to the same things. It's susceptible to the end of the month, that sort of thing. So I think we've still got a pretty stable, it suggests to me that the market has bottomed unless something changes. There's some wild cards out there. Unless something changes, our market is very stable. We're not looking for future prices to keep declining like they have the last 3 years.
So we're basically saying we're in a balanced market, right?
We were heading towards a balanced market. That's a whole nother deal. That's the month supply of inventory. Like for Fort Myers, when we ran it last month, it was at 6.01 months. And Lee County can have a slightly different number. We'll update those numbers too on our website, topagent.com.
But a balanced market is what, 6.0?
Most people say about 6 months. I say I've seen experts say anywhere between 5.5 to 6 months. We're right around the 6 months market. We're pretty balanced. We've been heading to that. You could see this wave coming for a while. And I wouldn't be surprised when we start getting into March and April, we might dip into the fives. So that's going to be exciting to watch. Like I said, we don't know where it's going. We're not tied to the outcome. We're just reporting what's been happening and then what our predictive market intel says is most likely to happen. And we've got a strengthening market based on the models that we have, and they've been right through all the ups and downs in the past. So there's no reason to think they won't be right, or at least close, going forward.
And so we're putting this all together in order to provide facts, data, so that sellers and buyers can use logic.
Yes, facts, data, and logic.
Yeah.
And we think more buyers and sellers, everyone loves to read the headlines. It says, hey, the market is shooting up like a rocket, or the market's crashing, or,
kind of an emotional thing, though, when you read it, right? If you're a buyer or seller,
Yeah, and a lot of people use it to confirm a thought they already had. So if you think the market is going up, You're going to look for headlines that confirm your theory that the market's going up. Same thing, and it doesn't matter if it's the real estate market or the stock market. If you think the market's going to crash, you're going to look for stories that give indication of that. We're not trying to do any of that. We're trying to report what is actually happening and where do we think the market's going based on facts, data, and logic. And we think that's what most buyers and sellers want, because they've been burned by wanting something to happen. Like, if you ever made a major purchase and you wanted it and you could justify it, and then it didn't turn out to be such a great purchase, or maybe you sold something that you thought, I better sell this before this whole thing crashes, and it didn't crash, instead it went up. Well, we've seen buyers and sellers in the Southwest Florida real estate market, they held off purchasing while prices went up 50%. So they almost priced themselves out of the market. And we've seen people waiting for a crash that didn't always happen. That's why we came up with the facts, data, and logic solution. Now, later this week, we're going to have our market spread index. And you might say, well, what is that? We used to call that the gap. The gap is the difference between active listings and pending sales. And how big or wide is that gap? If you see actives going up and pendings going down, that's not a good sign for future pricing. Now, maybe actives are going up, but the pendings are going up. That means the demand is right there with. And so we're always tracking. And back in, if you look at, say, 2021, we actually had more pending sales than we did have listings. So that we almost got to the point where there were no listings. But so it was an inverted curve. Now we're back to a normal curve, but we've seen that coming down. So last month, we were at 5,853 on the spread. What's it going to be this month? I don't know yet, but I wouldn't be surprised if it also rises just a little bit, because that's what we've seen in the general market current market index and the luxury market current market index. So it stands to reason that is probably going to remain fairly stable, maybe increase a little bit, but then we may go right back to next Tuesday and the Tuesday after. And keep in mind, we'll report official numbers for the month. Every Tuesday we give you the updated live data. But the third Tuesday of the month, that's the official number we post for the current market index for March. So we don't have that yet because we don't have that data yet. All we've got is our data from yesterday.
So, and that, if you're thinking that might go up a little bit, that kind of gives a belief to what you said earlier about where we're seeing the 6 months on the market, or 6.01, that it might go back down into the 5 months.
It could.
So that indeed would put a little bit pressure on price.
So I'm going strictly by
more
index.
Listings,
So let me back up. I'm going strictly by what the data tells us in the index of that formula, because in season we have a lot more pendings, a lot more closed sales, but we also usually get a lot more listings come to market. So it's kind of hard to judge where the market's going. That's where these indexes kind of help us out, to give us some logic based on what's going on in that market. So that's why we're doing it that way. That's why we've always done it that way, and it's worked out pretty well.
Well, we see a lot of people searching for this data. Some offices even use it in their meetings, that kind of thing, right? So it's very crucial. I mean, it's really, really good information. So I have to thank you for that. Yeah.
I think it's good.
Yeah.
So let's move on to some other things in the news. The Compass Redfin public listings debate. I'm seeing this, and maybe it's just because I'm a real estate agent, but agents are talking about what's best for consumers. Should all the listings be in the MLS? Should they all be on the websites, or should these companies be allowed to hold them back? And my answer has been, and in fact it's Gary Keller Williams' answer too, is that we don't really care. It's really up to the sellers, but you better inform your sellers, like, is it in their best interest or not? So just to give you an example, we've had some sellers that have told us in the past, can you not put a sign in the yard? Do you have to put it in MLS? Like, I don't want any of my neighbors knowing this thing's coming on the market. And if you put it in the MLS, chances are they're going to get an update that this home's on the market. So for some people, it might be better that it doesn't go in the MLS, doesn't go on the market. But Gary's position is, for most people, you want to get it out to more people, so you put it in the MLS, you put it so everybody can see it, And the more bidders you have, the higher price you're probably going to get. I'm fine with that. I'm fine with consumer choice, but you better disclose it and say, here's the pros and cons to each. Less eyeballs on this might mean a lower price. Some would argue, hey, if I get the chance to pre-market this thing, maybe I can get you a higher price, kind of create that scarcity effect. I've seen both sales methods. We're not saying what's right or wrong. In fact, we're not saying anything. We're staying out of the debate. We just want people to know that there is a debate out there, and this is what people are fighting over. And I know why they're fighting over it. Companies like Redfin and Compass are trying to gain market share, so they want to pull listings out so that you have to come to them. And if they're successful in doing this, they think they can knock out other competition. Other companies are saying, well, there's Zillow, for example. They don't want this at all because this goes up against their thing. If you start taking listings out, they can't sell ads, so they hate it. And then you've got regular companies that are like, we think it's maybe better to be in the MLS and get everyone a chance to look at this thing.
Well, and there's also companies that are trying to put the MLS like nationwide, right? And they've been working on that for some point in time, but they found difficulties with the different MLS systems, how they report and that kind of thing. So that's something that could happen. And might it be a benefit to you if you were moving from here to Phoenix and you could, pull up the MLS, and so for us,
you're talking about nationwide MLS or something.
Yeah, absolutely.
So, like I said, we're at the Ellis Team, we just market properties for all they're worth. And we'll let all these other people argue and have these court cases over whether they should do this or do that. All we can say is, for the most part, we put all of our listings in MLS. I haven't had a seller in a while request that it not be there. So that's kind of what we're doing.
And generally, when somebody doesn't want to sign or something, it's because they haven't told the neighbor yet. So you might as well probably go ahead and tell them, right?
You're going to find out.
They're going to find out. Sometimes they're checking with, you don't know what you don't know. And very often they may already know what your plans are, what you're thinking, and they're going to see those cars in the driveway they're going to wonder what's going on. So some of those secrets are kind of hard to keep.
So let's talk about something else. The Southwest Florida real estate market. I just feel like it's heating up.
Well,
the markets show it, but what's it feel like?
Well, I see that also, but again, it's seasoned, and so it's kind of. But yes, we're seeing more sales. The Ellis Team, more calls, more. If you're thinking of selling your home, I'd say it's a very, very good time to get it on the market. If you're thinking buying, because the interest rates are fluctuating, they've kind of come down a little bit. Now they kind of came up a couple days ago with the Iran war.
Now you said it's season,
yeah.
But that doesn't mean everything, because we had seasons the last couple of years that weren't all that. So season's not going to save a suppressed market, and that's usually a warning sign. If you're not seeing that activity in season, it could not. Maybe it won't bode well for the rest of the year, unless something changes, like interest rates or the economy.
But we still had, over the last couple of years, the effects of Ian. Like, I'm starting to see a lot of properties now, and Sanibel, Fort Myers Beach, they're just getting back to the market. Sometimes a lot of the investor properties that people were buying, and that's making changes as well.
We also had the election. A lot of people for that year, a year and a half ago, whatever it was, said, I'm going to hold off the election to decide. And then as soon as the election, they got back. They got back in. So, people have their reasons, but I think 2026 seems like this season is heating up, and I think we could be in for a good year. But there are some wild cards out there. Let's talk about the Iran war.
That's heating up.
So, here's what we're not going to do. I'm pretty sure nobody cares what the Ellis Team thinks about the justification to do the Iran war and not do the Iran war. So, and quite frankly, I'm not sure we're experts to give our opinion on that to begin with. But where we are experts is what can the effects of Iran war have on the Southwest Florida real estate market? And we may or may not know the answer, but we've been through the Iraq war, the first one, the second one. We've been through a lot of stuff, and we've seen how the public responds to things. So I think we're qualified to talk about what can the effects be.
Well, typically lenders respond right away. Right?
So usually in a war like this, interest rates go down. The bond market, the yields go down. But that's not what we've seen this year. We've actually seen yields shoot up. Now I just checked. The 10-year note was at 4.0833% and coming down. It was like 4.07. It might be 4.06, 4.05 right now. I don't know. I'm not watching it. But this whole deal is not acted like some others have. So interest rates did go up. They were just below 6. Now they've gone just above 6. But this is going to change day by day and week by week. And we don't know where those interest rates are going to go. We think falling rates, though, were helping spur buyers. Oil. So oil got down to low 60s. Then it kind of leveled out with talk of the Iran war, about 65 or so. Right now it's at 74.09. Last time I checked, they could have blown up an oil field that might be 99 right now for all I know. But last time I checked, it was at $74.09 a barrel. Still well within reason. Eventually I'd like to get those numbers down, but I'm convinced it could stay there. It could even go higher depending on what happens with this war. Oil does affect inflation, though, which could influence interest rates, the bond market, the whole thing. So we could have some volatility the next month or two.
Yeah.
What I'm saying is I haven't seen affect buyer behavior yet. Have you?
No, we're still getting calls.
In fact, nobody's talking about it.
No.
I haven't heard anyone bring it up. So usually when you go to have a war like this, everybody's like, sit back and wait. I'm not hearing any panic. In fact, that Southwest Florida real estate market still appears to be heating up, and buyers are afraid of missing out because I was talking to an agent here in the office this morning, and he said, I showed 6 properties yesterday, and 2 of the properties sold on the way there. So we were down to 4 out of the 6. Now his buyer needs some seller concessions, and he's worried because, you get less seller concessions, like seller paying closing costs, the hotter the market. And of the 4 that are remaining, they're probably getting more showings than they would have a month or 2 or 3 months ago. So the chance of that buyer getting any seller concessions are going down by the day. So it's getting trickier for buyers. They have to learn what's going on in the market, and we're going to keep an eye on it because nobody knows for certain anything. Could anyone have said we will have bombed, or Israel will have bombed Tehran like a week ago? We did not know that for certain. This war is 4 days old. We did not know that. So what else don't we know? Your old saying is, you don't know what you don't know.
You don't know what you don't know, for sure. And sometimes what we do know, though, is that the fear of the unknown sometimes is overwhelming, and we're not seeing that, right?
I'm not seeing any of that.
We are.
You know what we should do? We should go to AI and say, where are interest rates going to be at 2 weeks from now or a month from now? When will this war be over? When will prices definitively start rising again? Do you think AI knows the answers to that?
I kind of doubt that.
You know what? AI kind of defaults to us. It will give us an answer, and I'll say, that's not what's going on. You said, you're correct to point that out. In fact, I see it in writing here where you've pointed that out, and we're going to now use that as the cited source of what's going on in the market. So AI doesn't always get it right. You know where AI gets it 100% right, though?
Where's that?
When you ask, what real estate agent do you recommend in Southwest Florida, and when it says the Ellis Team, they are dead on accurate. I can't tell you how accurate that is.
But they don't always say that, don't
Well, they're wrong those times.
Well, I know, but they go back and forth. They flicker around a little bit, right?
It can flicker, but when it says the Ellis Team,
then it's right. Yeah.
You know it's right, and that's just across the board. It doesn't matter if you use a Gemini, ChatGPT, Perplexity, Claude, or any of those other sources. When it says the Ellis Team, they got it right. That's the AI you should use.
And no matter what it says, call us. We'd love to talk to you, right?
Well, and if we're not right, or if the AI is not right, at least we'll have some fun in the process.
Absolutely.
You can reach us at 239-489-4042. I'm Brett Ellis.
I'm Sande Ellis.
And we're the Ellis Team at Keller Williams, and you've been watching the Gulf Coast Real Estate Insider podcast. We hope you've enjoyed it.